Much. I wish to start the meeting by firstly introducing myself. My name is Clifford Muzoka, the head of ABC Asset Management. My two colleagues who have joined me on this presentation will introduce themselves, and then we'll get into the presentation. Thank you very much.
Thank you, Clifford. I'm Mwelwa Mukupa, Treasury Manager here at ABC ISL.
Thank you very much. Welcome, investors. My name is Pauline Mushili. I'm Client Portfolio Manager here at ABC Asset Management.
Thank you very much, colleagues. Viewers, once more, we welcome you. So today's presentation will be focused on our equity fund and general equities. We'll be giving you an insight into what equities are, what expected returns you'd expect from investing in this asset class, and also the associated risks which the asset class carries with it. I'll give you an overview of around equities, and then my colleague Mwelwa will give us a detailed presentation on historical performance of equities, both for the general market, that is through the index, the Lusaka Securities Exchange or share index, as well as the performance of our own equity fund. And then she'll be able to give, she'll be able to delve into the risks which are associated with investing in equities. Pauline will give a presentation on why you should invest, why it's more advantageous for you to invest through an investment platform such as our equity fund, as opposed to investing directly into the exchange. What are equities? Okay, so equities or an equity can simply be defined as a unit ownership in a company. Therefore, our equity fund is a collection or a portfolio of various equity investments. Okay. So it is a collection of investments in various listed stocks on the Lusaka Stock Exchange. So that is what our equity fund is. Okay. So as an investor, you would want to find out also how does value get? How would you obtain value from investing into an equity fund? There are two main sources of value for investing into an equity fund, or where the equity fund makes the returns which are then given to you as an investor. Okay, so the first way is through capital appreciations. So capital appreciation of shares, meaning the increase in share prices. So that movement in share prices is translated to you as an investor. So we call it capital gains. So capital gains obtained from the movement in share prices of stocks on the Lusaka Stock Exchange. That value is part of the value which are then given to you as an investor. The other way or other mode of obtaining value through this investment platform is through dividend payouts. Now, dividend payouts are payments from the earnings of a company. So when a company makes profits, there's a declaration of payouts, which are then given to shareholders within the entity. So the equity fund, being a shareholder in various listed stocks on the stock exchange, receives dividends, and then these dividends are then passed on to you as an investor on the equity fund. These dividends which come, we use them in terms of how we use them. As a fund manager, we use them firstly to give us the liquidity to pay customer payouts, and then we use it to reinvest in other stocks so that we are able to maintain dynamism in the management of the portfolio. It is through that approach that we are able to react to changes in the market and ensure that you are able to receive the optimum return on your investment. So the next question which you as an investor may have is, why invest in equities? That's a good question to ask, because there are other investment platforms you may consider to invest in. So why invest in equities? Okay, so investing in equities, unlike investing in, say, fixed-term securities, it provides you an opportunity to maximize wealth. So equities are classified as a wealth-generating asset class. Fixed-term security investments are investments described as for investors who seek to receive stable income at a low risk. Equity investments do have a higher risk threshold. Okay, so as the old adage goes, the higher the risk, the higher the returns. So the higher risk associated with equities provide you as an investor the potential to obtain higher returns. So that is what equities are. So they are a wealth-generating asset class. Okay, when I mention risks, I mean it may be important to also describe the context of risk in regards to equity funds. So this risk which the equity fund is exposed to is not an unexplained risk. It is a risk which is has or is explained by market fundamentals. There are market fundamentals which explain the risks which are associated with investing in equity stocks. I'll be able to give a full context of how factors such as economic fundamentals influence risks within equity investments. Okay, and further, my colleague Mwelwa will be able to give a more detailed breakdown of how these risks come about and even the means in which we mitigate these risks. Okay. The other question you may have as an investor is, does stage in life in terms of age matter to invest in equities? The simple answer to that is no. The stage in life doesn't, the stage in life in terms of age doesn't really matter. You can invest in equities at any point in time. The key factors which you need to consider when wanting to invest in equities are your risk tolerance. You see, so you need to have a defined risk tolerance, and then after defining that, you need to define how long you'd want to hold the equities for. Generally, investing in equities is more advantageous if you are willing to invest long term. So if you invest long term, you stand higher chances of obtaining a higher ultimate value of your for your investment. Okay, so when we talk about risk tolerance, we may also want to find out investing in equities has what we call short-term market fluctuations. How would you as an investor react to these sort of events? There are certain times where you find in a day there's a drop in share prices. Say you are invested in a CEC, maybe because of speculation or something. The price goes down by a certain margin. How would you react as an investor? Okay, so the simple advice we have as your fund manager is when investing in equities, you need to have a long-term view. Having a long-term view helps you to sometimes overlook the small market fluctuations and look at the ultimate goal which investing in these stocks gives you. And further, you would want to ensure that you are actively investing on the portfolio so that you are able to counter any short-term market fluctuations. Okay. Now, in terms of the same market fluctuations, how do we, as a fund manager, respond to them? Okay. So we have a strategy we call diversification. So the investments in our investments in equities in our equity fund is a diversified investment approach. So we have investments across almost all the listed stocks on the stock exchange. That is what we have. Therefore, a dip in one counter normally means there's a corresponding up on another counter, meaning the average is that negative dip is able to be responded to by the ups on other stocks. So the power of diversification is significantly used by us as the fund manager. Our ultimate goal is to ensure that you receive an optimum return for investing in the portfolio. We also do a number of investment undertakings to ensure that we are able to deliver the sort of value you want as an investor. So we do active market management to ensure that we are able to monitor these stocks. We are able to exit where we feel the counterparty is not showing sufficient strength, increase holdings in certain counters where we see more strength, or we are anticipating significant market improvements. So there are all these things we undertake to ensure that we are actively managing your portfolio. Okay, so that is on risk tolerance. The other question you may have as an investor is to find out what is the current performance of equities. My colleague Mwelwa will be able to give a more detailed presentation on how the current markets are prevailing on equities, and also giving a historical performance review of equities, so that you have a more holistic view, even as you consider investing in equities, or even as you consider to increase your investment in equities. Okay, so the current performance of equities overall is good. So with the Lusaka Securities Exchange All Share Index recording a growth of about 59% as at 31st August 2025. Okay, so the Lusaka Securities Exchange All Share Index is an average market index, meaning it represents the growth of all the listed stocks on the Lusaka Stock Exchange. An example I would give is if you are an investor who at the start of the year had 100,000 and you choose to invest it across all the listed stocks on the Lusaka Stock Exchange, that 100,000 as at 31st August would have translated to a profit of 56,000 kwacha, meaning your market value, or your absolute value, will then be 1,056,000 kwacha. Okay, so that is what the current performance entails. Okay, so the question you may have is, what factors influence the performance of equities? Okay, there are a number of factors which influence the performance of equities, and like I mentioned, the risks which are associated with investing in equity stocks should not scare you as an investor. There are risks which can be explained by market fundamentals. You see, so you're able to through looking at what is prevailing in the economy, you're able to have a view, or at least a feel of how stocks generally may perform. Okay, so meaning if we're having a stable economy, equities are generally expected to perform stable to even growing. That is the sort of view you would have. In a crisis, as Mwelwa will run through, such as the COVID pandemic we experienced in 2019, 2020. So that sort of experience affects the whole market, and you saw equities performing quite poorly because of such events. Okay, so the current market, what is influencing the current performance of equity stocks in Zambia? Okay, so I'll give you a few of these factors which are influencing the performance of equity stocks. The first one is the significant appreciation of the Zambian currency, the kwacha. The kwacha has recorded significant growth from about 28.5 at the start of the year, kwacha to dollar, to now about 23 kwacha to dollar. This appreciation of the currency has a positive impact on the performance of stocks. The second factor is government policies. So government policies, the current government policies being pursued have enabled investors to have increased investor confidence. So you see a lot more investments coming into the country because of that sort of investor confidence coming and arising from government reforms. Factors such as debt restructuring have resulted in increased investor confidence. Okay. The other factor which is influencing the positive performance of equity stock is improved performance of listed companies. A number of listed companies, if not all, are performing very well. If we look at their bottom figures, recently you may have come across a publication where CEC recorded a milestone market valuation of $1 billion United States dollars. This signals that the market as a whole is moving forward. The other factor has been the active participation of various investors, okay, through the use of technological interfaces. These technological interfaces have enabled for an active market to prevail. So we have a lot more investors coming into the capital markets, into investing in stocks, and this is providing the market with liquidity and also enhanced investor confidence. The last factor is improvement in copper production. As you may be aware, Zambia is the main export earner for Zambia is copper. We've recorded significant growth in copper production, with mid-year standing or recording 18% increase in copper production. All these factors are coming to influence the market positively. At the for now, I wish to pause off and invite my colleague Mwelwa to run us through equities performance as well as risk associated. Once more, I wish to encourage you to actively to share through your questions and clarities on our chat. We wish to request that if you can be including your phone number at the end of the question, so that we're able to pick them up. Towards the end of the presentation, we'll be able to answer a few questions from the chat. However, all the questions which will be submitted on the chat will be able to be responded to even after the meeting. So use the contacts you would have given for us to call you and inquire and ensure that we addressed those questions you may have. Our team has also shared our contacts. Should you have those questions, you may feel you would want to speak directly to us. And also, as licensed investment advisors, please feel free to reach us on any investment advice you may want. That is what we are mandated to do by our regulator, the Securities and Exchange Commission. Thank you very much, Mwelwa.
Good morning, fellow investors. Thank you so much for your time. Without taking much time, I will proceed to share my slides so that we can get into an understanding of equity as an asset. I know Clifford has done a very good job in explaining, giving an overview of the equity market as well as the performance of the economy and how it affects equity currently. So right now we'll just go into equity. What is it? What's the hype about the equity market right now in Zambia? And let's see what we can learn from there. Okay. Okay, I hope you can see my screen. Okay, so from the basic understanding, equity simply put is the unit of ownership in a company. So when you buy equity in a company, what you're doing is you're becoming a part owner of that company. So if I buy shares in Zanaco, it means I'm part of the ownership of Zanaco. So it's a great thing. You should be happy when you purchase shares in a certain company, because then it gives you those bragging rights to say you have part ownership of that company. Having part ownership of a company gives you rights to their profits. However, it also gives you rights to their losses. So equity is a two-side coin in that it gives you rights of ownership and gives you rights to the profits as well as the losses. So characteristics of equity. What makes equity different from different asset classes? So we have equity, then we have debt. Under debt, we have the government bonds, we have term deposits and the like. So what makes equity different from these other asset classes? First of all, like I touched, it represents ownership in a company. When you have a government bond or when you have a term deposit from, let's say, Zanaco itself, when you place a term deposit with Zanaco, you don't have ownership of Zanaco. However, when you buy shares in Zanaco, when you buy shares in Zanaco, you then have part ownership of that Zanaco. Equity is high risk, meaning should the prices go up, you make a gain, but should the prices of that counterparty you have invested in go down, you make a loss. Also, if the company that you have invested in goes bust or goes under liquidation, I should say, you may lose or may not get much from your investment. Meaning the company will prioritize their debt holders first and then their equity holders last. Equity has capital gain potential, as already mentioned, meaning if their share price goes up, you gain from there. Basic example, if you invest in company X today at the share price of 2 kwacha, and then 5 years down the line, the value of that stock on the Luce is 10 kwacha, you'd have made a profit of 8 kwacha per share. So, however, this profit, I must say, is only marginalized or is only utilized once you sell those shares and find a buyer for them through the brokers, of course. Equity has high volatility. These are based on market conditions, company news, investor sentiments. Right now, there's a lot of hype in the equity market. Companies are doing well. There's a lot of investment in copper. There's a lot of investment in other things. So you see it portraying. Later on, we'll be able to see in the prices of these companies how all these market conditions, how this investor news, how it's portrayed in the equity prices. Equity also has no maturity date, that I must mention. If you have a fixed deposit today, be it for 6 months, 365 days, it will have a maturity date. However, equity is only realized once you decide to sell your shares. Equity also gives you diversification benefits, adding to your portfolio and to enhance returns and risk. So if you already have a portfolio in fixed income, in property as well, equity would also be good to diversify your portfolio. Equity pays out dividends. Companies distribute profits through their dividends. However, I must make mention that this is according to company discretion. This means even if you have invested in a company and they've been making profits for 5 years, they will only distribute that dividends when they feel like, or when they say it's a corporate good for them. So dividends are not guaranteed. So if your main aim is to invest, is to get dividends, you might want to do your research on which company pays dividends often. So where are equities traded in Zambia? Equities are traded on the Lusaka Securities Exchange. This exchange was established in 1994. We could say it's 31 years this year. It's amazing to see the growth that the Luce has undergone over these past years. We have 22 companies currently listed on the Luce, some of which I have listed on the slide. As you can see, there's CEC, Bata, Zanaco, Zambia Sugar, ShopRite. All these are traded through the Luce through stockbrokers. So on my screen, you'll be able to see how has the Luce been performing. However, I've only given a 7-year review. This data is from the Luce website, so if you'd like, you could also have a chance to go through the website. It's very informative. So some highlights from the LASI. The LASI is the Luce All Share Index. An index is just really something that shows the performance of how a stock exchange has been performing. So we can see in 2018, the Luce was at 5,000 points. So it said from 2018, we see in January it was about 5,000 points. Then in 2019 to 2022, we see a decline in the performance of the Luce. That was the COVID period. I'm sure you might remember quite well. Economic activity was quite low, and no much copper production was happening. A lot of people were laid off. We could say the economy was really struggling at the time, and so we see how it is portrayed in the equity prices. So I'm sure you could see a lot of companies' prices went down. So that was during the COVID period. In January 2022, however, we start to see the rise up to 2025. We could say the LASI is shining of late. We have reached the highest index of about 25,000 points this year, with top gainers CEC and ZCCM IH which have hit $1 billion in market capitalization. We also see CEC share price, which has also increased greatly over 2025 in just a year, which has made the LASI a top performer in the whole world. And I think that's incredible performance. Dear investors, you know, as I was doing my analysis, I was thinking of the investor who started their investment somewhere in 2018. This investor, I'm imagining, went through the COVID. Obviously, the price went down in some of their stocks. But now look at the performance of the last year and how much I was just amazed to see and wonder how much would this investor have gained over the years if they had started in 2018. There's an investment saying that goes the best time to start an investment is 10 years ago. And the second best time is now because we cannot go back in time. So it's very encouraging when you look at the numbers and how the equity has been performing. It's a long-term gain. So you stay in the market, see how it performs, and then you'll definitely reap your profits from equity. Key drivers. I'm sure you've seen, I said 2025, equity has been shining. We've been doing so well in Zambia with our equity performance. So what's with the equity buzz? Why is equity doing so well suddenly? Copper sector growth. There's been a lot of investment into copper. There's a lot of copper production that's been happening. And this has also trickled in the equity prices. We have companies like Zamefa, which had a price of 5 kwacha just in January this year. And in September, we have 37. It started at 5 kwacha, and now it's valued at 37.5 kwacha. How amazing is that? We have AECI, Africa Explosive, which started at 31 kwacha and is now 75 kwacha. That's an amazing gain. The price has literally doubled. ZCCM-IH is also shining. It started at 65 kwacha and is now at 150 kwacha. So you can see how people are really benefiting from equity as an asset. Equity also gives you another driver of the equity market performance is currency appreciation. There's a lot of investor confidence. People are now looking for ways to place their money. The falling bond yields as well have affected the equity market positively, I must say. With the increase in withholding tax, investors are looking for where else they can invest their money, because withholding tax will reduce the investor returns on the bonds. So people just like you and I'm sure for you to have logged into this meeting, you're looking for where else can I place my money? And so equity has become another source or an asset that people are looking into. There's also a lot of retail investor engagement, you know, with the financial literacy. A lot of people just wonder, what is equity? They don't know where to start from. I don't understand this asset. Why should I invest it? But now, because of financial literacy, there's investors like you who are taking time to join this webinar. Now they're starting to understand and see, equity can actually work for me, and it could actually be a great addition to my portfolio. So the ABC Equity Fund. Why invest through ABC, through our equity fund, and not go directly? I'm sure Pauline will touch on that more later. But just about the ABC Equity Fund, we are an actively managed portfolio, meaning we look at the portfolio on a daily, see what stocks are doing well. The ones that are doing well, we buy. The ones we feel are weighing down the portfolio, we sell. So it's our job. There's a committee that one that I'm part of that takes time to actively manage the equity portfolio. Our portfolio has an 80-20 mix. 80% is in equity, 20% is in term deposits. I must say maybe 15% is in term deposits, 5% we keep in cash, because ABC has a policy to pay out claims in 48 hours. So we do keep some cash so that in case someone wants to withdraw, we have that for you. And then our year-to-date performance is currently 48.6%. So if you had invested in equity, you should be expecting some such gains as at today. Over the past 4 years, our average performance has been 23%. You'll see fluctuations here and there, but like I said, it's a long-term gain. So the benefits of equity are felt in the long term. You need to be very patient as an investor if you want to invest in equity. Our LUCE exposure, or LASI exposure, is 77.2%. This simply means we're invested in 17 counters or 17 companies on the LUCE. In the next slide, as you can see, these are the stocks that we are invested in on the LUCE. We have exposure to AECI, Zamefa, Airtel, Shoprite, Zambif, Safico, Raise, Lafarge. So these are the stocks that we are invested in currently as ABC Asset Management. And now, just to come to an end of my presentation, should we then invest in equity after everything that I've said? Of course, we should invest in equity. It has potential for high returns, just like we've already mentioned. It has potential for earning dividend income, diversification of your portfolio. It will also protect against inflation over time. I'm sure we've seen the past year for our fund has been, for the past 4 years, it's averaged 23%, which is higher than the inflation of 12.3% today. Equity also gives you transparency. All the companies listed on the equity, you can find their financial statements. So you're able to determine which company is not doing well, then you disinvest. Which company is doing well, then you invest. But if you go through us, you then save that headache, because then we're there to do it for you. Thank you so much for listening through. I'll now hand over to Pauline, who's going to tell us more of how we can invest through the ABC Equity Fund. Thank you very much.
Good afternoon, dear investors. My name is Pauline Mushili, and I'll be running you through the topic which we're going to discuss on why you should invest in equities through unit trust fund management as compared to you going direct investment. And for us to discuss this topic, I would like us to consider 4 benefits that are going to help you make that decision of going through a fund management as compared to direct investment. And let me just highlight the 4 key benefits that you need to consider, and that is professional management, diversification, liquidity and flexibility, as well as economies of scale. Then after that, I'm also going to discuss how to open an equity fund with us, with ABC Asset Management, and also the conditions and characteristics that comes with the equity fund under ABC Asset Management. So to begin with, talking of professional fund management, you will understand that when you invest through a unit trust, money is invested, is placed in the hands of professional fund managers whose full-time job is to study and analyze the market, study the companies, and also to make informed investment decisions on your behalf. Allow me to share the... Okay. Yes, so as I was explaining, under professional fund management, you will understand that when you invest in a unit trust, your money is placed in the hands of professional fund managers whose full-time job is to study the market, analyze the companies, and make informed investment decisions on your behalf. This means that you will not have to worry about stock picking and market timing. The experts are able to handle that on your behalf. More importantly is that professional fund management removes the emotional biasness, and this helps you for the fund managers to constantly align your financial goals, and also even in changing market conditions. So what happens under professional management is that there is what we call research and security selection. So fund managers are going to do a rigorous bottom-up and top-down analysis, which includes company financial analysis, industry outlook, macroeconomic conditions to identify the the undervalued opportunities and mitigate the downside risk. And also what fund managers would do is that they are going to engage into active monitoring and also rebalancing. So unlike the static direct equity holding, unit trust portfolio are continuously monitored and are rebalanced to reflect the changes in earnings forecast and also the interest rates or even the sector rotations, thereby maintaining the optimal risk return positioning. The other aspect that you need to understand or that you're going to benefit from is that unit trust equities are easier to sell and buy, and if you are to compare to individual shares, equities, unit trust equities are easy to sell and to buy, especially in less liquid markets. So what that does is that with unit trust, there is a provision for daily liquidity, and investors are able to make those unit redemptions. But that, of course, depends on the conditions of the fund, which I will explain in my later slides. So by investing through a unit trust, you are not only gaining diversification and also professional management, but also avoiding the hidden costs or the slippage that most retail investors typically face when trading directly. And by slippage, I mean the difference that is between the expected price and also the expected price of a trade to the executed price. So let's give an example. Today you want to buy 1,000 shares directly on the stock market. So for 1,000 shares, you place an offer for 5 kwacha per share. But then by the time that you want, by the time the execution for that offer is made, you find that maybe the price has gone up by 2 ngwe. So that means that you're going to incur that cost of 2 ngwe per share, which is something that you can avoid if you were to invest through a unit trust fund management. Then the other aspect is on economies of scale. So for economies of scale, this happens when the increased investment size lowers the cost per unit of investment, and also the institutional pricing as well as the preferential trading terms. So for larger investments, the pools can access lower transaction costs. So because we are aggregating trades for many investors, we are able to negotiate for better brokerage fees and also the execution fees, which significantly reduces the cost per share of individual investments. In economies of scale, in unit trust maximizes the effective value of your investment as more of your capital goes into asset rather than fees or even slippage. So then, how can one open an equity fund account? So all you need to do is to fill in the application form. We've got the application form which includes all the fund types. So if you want to open an equity fund, then you will need to fill in the part which says equity fund, and then indicate the initial amount that you're going to start with, and sign off, and also sign off on the recommendation, have your recommendation signed off for you by an existing unit trust holder or a commissioner of oath. And also, when the account is opened, you will need to make your initial deposit. Once your initial deposit is made, your account will be activated, and you will also have access to the online platform where you are able to track your investments. I must also mention and emphasize that as you make your deposit, please you need to input your name as well as your unit holder reference code, because that's the unique ID to your fund. And this applies to all investors. If you are investing in a unit trust, there is a pool account where all funds go to. So if you do not indicate your name, that means that your funds will be suspended until you make that claim that you have made the deposit. But it's even easier if you indicate your name and also your unit holder, so that it's easy to align to your profile. You may also want to send someone to make a deposit for you through the bank. Please ensure that they have your name indicated and not the depositor's name, but the owner of the account should be indicated as you make those deposits. So just to highlight on what the equity fund offers to investors, we have said it will give you exposure to potentially high returns through equities. There's diversification and also professional management to reduce the risk, and there's also liquidity and convenience to avoid the complexity of managing individual stock portfolios. So for the equity fund, the annual yields. So as you begin your investment, the returns are not indicated as you start on your journey. But on average, over the past 5 years, we have traded. The yields have been between 15 to 30%. The minimum investment on equity fund is 2,000 kwacha, and thereafter you make 500 kwacha contributions. So the 2,000 kwacha is just your initial start, your initial investment amount. Then the holding period for this fund is 4 months, and it allows for 3 redemptions annually. And the risk factor, as earlier indicated, is that this falls under high risk, and it's meant for risk-tolerant investors, those that are looking also for long-term investment perspective. Thank you very much. We're looking forward to have you on board under the equity fund.
Thank you very much, dear listeners. We wish to thank you for your attention during the presentation, and we are following through on the chat the questions and clarifications which were being brought about. At this point, we wanted to just respond to a few questions before we close, and maybe we may allow 1 or 2 investors to just speak so that we are also able to get some questions verbally. So for there was a question from Mr. Joseph Kandingwa requesting for the half-year results. We'll be able to circulate the half-year results to all investors before the end of next week. We just did a few touch-ups, so we'll be able to send through those reports by before mid-October. So you'll be able to have this information with you. That is our half-year results for the unit trust. Another question we wanted to take was from Ms. Munansangwa. Ms. Muma, we wanted to who wanted to inquire on whether we'll be able to share the presentations. I will be able to circulate the presentations to you investors, so you'll be able to have the presentations we are undertaking, and please feel free to raise observations and queries even after receiving these presentations, so that we have you, so that we are able to provide all the necessary information to enable you make the best financial or investment decisions. The other questions, there was a question from Clara, inquiring on why, what benefits or advantages of investing through an equity fund as opposed to investing directly through to the exchange. So the response to that, as presented by Pauline, a number. You know, it's a situation where you remove the pressure of managing a portfolio from you and put it on licensed experts to manage the portfolio on your behalf. So there are a number of advantages beyond the professional management aspect. There's active management of the portfolio. So investing in the equity fund is buying into a cocktail or a combination of various investments. So you are able to get the best average return through investing through an equity fund, as opposed to you buying directly into a nut brew. You buy shares in national breweries, and national breweries all of a sudden has a significant market depreciation or decrease in market share. Then you're exposed to all that dip. But if you have invested into an equity fund, you'll be able to benefit from the benefits of diversification. So diversifying our portfolio across different counterparties ensures that we avoid the waste and ensure we get an optimum result for you as an investor. So that is our response to the question from Clara. There was a question on whether you're able to apply for the unit trust through online. The answer to that is yes. We do have, you are able to apply online. Please just reach us out. We'll be able to ensure that you are onboarded and your account is opened through that. Our sales and customer management team will be able to provide you with all the support, even as you are filling in the form, to ensure that we onboard you seamlessly. I'll read two more questions before allowing two participants to just give to provide to give questions. We'll unmute at least two so that we are also able to pick up such questions. So the last two from the chat is from Mr. Nkoma, Mr. Paul Nkoma, who asked on who chooses the best companies to invest in. So that the decision of which stocks to invest is done by ABC Asset Management through our investments committee. So our investment committee is charged with managing our investment operations, and we have an investments team which manages the day-to-day management of portfolios. So portfolio balancing, portfolio management, exiting from counterparties or issuers where we don't see strength, investing more on where we think would obtain the best value. All those decisions are made by a team of experts under our investments department. The last one is from Mr. Oswald Piri, who wanted to inquire if it's necessary to make monthly deposits of 500 kwacha if you have invested on the equity fund. The response to that is what we require for you is to, first of all, once you deposit the initial deposit amount under each of our portfolios, after or subsequent to that date or after that, you can deposit any amount which you are exposed to. It's not limited to a particular amount in terms of recurring investments you'd want to do. So after making the initial minimum deposit into a fund, such as even the equity fund, you can be depositing as and when you have. The point is to be an active investor. You'll be able to benefit and receive benefits from this portfolio. Technical team, are we able to have two questions? Dear investors, are there some who may want to speak?
Hi, okay. Thank you very much for the presentation. I have a question. How often is the dividend treated? and the equity fund to buy shares directly. How is dividends treated and how the equity fund compared to buying shares directly? Thank you very much.
Okay. If I got you correctly, you are asking how dividends are treated on the equity fund. Okay, so our response to that is maybe, okay, I can take that. So the dividends are an income to the overall equity fund. Therefore, they are treated and shared with all, they are shared among all the active investors within the portfolio. So there's a system we use called unitization. So any returns obtained by the fund are proportionally shared with investors on the portfolio. So it's a portfolio gain which is shared proportionally among active equity investors on the portfolio. Next question.
Okay, good morning.
Good morning, Mr. Siame. Please go ahead.
Okay, thank you. First of all, I wanted to begin by extending my gratitude and appreciation to the team. Thank you so much for the presentation. Really been insightful. And just a quick one, I wanted to find out whether that is available. Do you make available maybe the management fee, regulatory fee? Is that information on the domain for us to be able to just out of curiosity? Thank you.
Thank you very much, Mr. Siame. We do disclose our fee structures, and this is included in our brochures. So what we'll be able to do, since this question has, since you brought out this question, we'll be able, when circulating the presentations, we'll include a brochure which has fee structures across each of our portfolios for you to be able to understand how our various funds are managed administration-wise in terms of fees, and also include a write-up on how each of our portfolio is performing in terms of the year-to-date performance, net of those fees. So there will be fees, and then the returns which we are receiving as an investor. Okay. At this point, we wish to...
okay, thank you so much.
Thank you very much, Mr. Siame. At this point, we wish to thank you for the time you took to participate in our ABC Investor Time webinars. These webinars will continue. We'll be having these twice in a month, targeting various topics intended to ensure that we are able to disseminate more information to you, our investors, so that we have an informed investment customer base. So that is our intention. As we have started the month of October, please expect invitations to 2 webinars where we'll focus on different portfolios. We encourage you to actively participate in these presentations. Please feel free to offer suggestions so that we can make these presentations as more insightful as possible. We wish to thank you for taking the time and wish you a wonderful and productive day. Thank you very much.